Good morning, everyone, and welcome to the week ahead video. I'm filling in for Blake, who's out on his the balance of his 4th of July excursion. So I'm just filling in this week as for the week ahead video, and welcome you to ForexAnalytix. And just to start out with, I just want to go on and once again introduce the platform, and you can go on and try it out for $1. You have the ability for the 10 days, and you have the ability to go on and excuse me, download that on your tablet as well as your phone app. Once you've gone and done that, you can see that we have quite a plethora of disciplines, where there's going to be harmonics, Elliott waves, or basic technical, as well as general candlesticks, and the macro, okay, for all the instruments from not only Forex, but includes gold, the different markets. But that being said, we also have our calendar data that's included, as well as the chat room. Also, go on and visit our partner, which is ForexFX. We'll go on and assist you with locating a broker based on the type of trading you do. If you're a scalper or a day trader or a short-term trader, or you hold for longer, you can certainly go on and check out our partners with ForexFX. That being said, let's go on and get into the data. And we saw, obviously, a pretty good strong jobs report coming out on Friday. And we can go on and touch on that quickly. And then we have some interesting or key data out this week. We did see a jump of 224,000, which was greater than what was the expected, 160,000. But we did see weaker numbers for April and May. And one of the things that the market was focusing on as a key was going to be the earnings, average hourly earnings. They were looking for 0.3, and we came in at 0.2, which was a little bit weaker than most would have expected. But certainly, I think that this has a lot to do the market's reaction, which was primarily with the positioning of the market. And we'll just take a quick look with the euro dollar. In regards, I think that kind of points it out a lot better. One of the things that Steve and I were discussing when I was on Face on Friday was the importance of this 1262 here in the euro, and for the market to hold that. And one of the things that we'd seen here with the euro is we thought, wow, you know what, it's held up okay despite the barrage of selling that was being induced because of the new lows in boon rates, or new all-time lows. But with that data that came out on Friday, we broke below that 1262. So technically, like I said, this was really a hard break and difficult. And I think a lot of Friday, I mean, I can't dispute the strength in the NFP, but a lot of this had to do with the positioning right here, where I think this was basically your throw in the towel after what had been a phenomenal run here in the euro, and then hanging on here, and then we tested lower. Losing the 1262 from a technical standpoint was very key. As I point out, the euro dollar comprises 56.4% of the cash dollar index, so they trade in concert, so to speak, and diverging directions. So certainly we saw that push here. We'll go in and take a look at the cash dollar index here. Before we get to that, though, I am going to look ahead at what the news events we do have this weekend, and kind of where they're going and set us up for the week. As we come into Monday, we do have on the European side German industrial production starting out the week. And then later on Monday, which would actually be Tuesday, would be Australian NAB Conditions Index. And we'll take a look, obviously, at the Aussie dollar. Just want to touch on how this will play into the reports as we go into the week. Now, that's on Monday, and it's, in a sense, typically light, per se. When we roll into Tuesday, we do have Mexican CPI, and this week is going to be a big week for CPI and PPI, but Mexican CPI is going to be out on Tuesday. We also see Canadian housing starts and the JOLTS job openings. Now, we are going to have Fed's Bullard speaking later on that morning in St. Louis. So we do have some Fed tape bombs this week, and we'll get to that. Also, Bostic will be speaking in the early part of the afternoon, or U.S. afternoon. So once again, potential comments that could impact. I mean, we've already seen, as I mentioned, if you're looking here at the dollar, we've already had a pretty phenomenal, I wouldn't say phenomenal, but very, very good run here. We broke back up above this trend line that had been broken. We got above that. But after I think that we've have people rolled out of their positions or knocked out of their positions, probably going to start the week maybe around here and then maybe just kind of hang around. And then as we move into different Fed speakers, probably the potential for us to slide back. We've seen that back and forth again. We've seen, if you think about it, a lot of good volatility in the sense that where the market swings, we go into one big direction and then we turn around and give a decent amount of it back. We go back to another direction, and then we give a decent amount of it back here, quite a bit here. We make another rally. Okay, that was a false breakout, and then we turn around and we break pretty hard again. And then we kind of hang around here, and then finally we start to break higher. So it's been the 2 steps forward, 1 step back, or sometimes 2 steps forward, 3 steps back. And we've seen that also, obviously, with the euro going the other direction. We talked about that, how the euro had really taken off like gangbusters and looked like it was really starting to make a move higher, and then only to lose a lot of this, and a lot of that predicated on those new rates, new lows in bunds, which really was in relation to really the poor data that's been coming out of Germany, which we saw some more of that on Friday, which only accentuated the fall before we even got to NFP. Honestly, the rest of the Eurozone has not been bad at all, but the German data has just been, nothing short of abysmal for the last few months. Matter of fact, like I said, to start the week, we do have German data that's going to start out on Monday, as we have German industrial production. So you can see the euro still a bit on the back foot as we start the week out. As I mentioned, coming into Tuesday, we will have JOLTS job openings, Fed's bullish speaking, and Bostic. And then later on in the evening, which is really Wednesday morning, depending on what area of the neck of the woods you're in the globe, we do have Australian Westpac consumer confidence numbers. Now, Wednesday, and like I said, it's important because I think these kind of position you or give an indication to put you in going with the flow of the market. Now technically, where these markets can't go on and move to, Wednesday's going to go and be big because we're going to go and have the minutes. There are going to be FOMC minutes. Also, we do, let me see, let's look on here, is that we're going to have Powell testifying before the House Services Panel. That's going to be at 10 a.m. Eastern. That's going to be huge. And then earlier in the European session, we do have UK industrial production and construction output, as well as wholesale trade for the U.S. But obviously the big, and more importantly also, is going to be Bank of Canada rate decision, which will be out. As I said, that's going to be on Wednesday. So Wednesday is going to be a big day. So you could see the market start at the beginning of the week and maybe kind of ease back a bit as we start to see some of these events that could potentially move the market, because not only on that, we are going to have later on Wednesday Aussie consumer inflation data, but obviously Wednesday is going to be big for the dollar, as I mentioned, with Powell speaking, and also FOMC minutes here. Now let's go on in. Let me one moment. And then moving on to Thursday, we've got some big tape bombs, and I'll go to that. Once again, we're going to have German CPI. Once again, probably you can see the euro fade in a little bit. So I think this week we're going to have a little bit of back and forth swaying here with the dollar. We've already knocked quite a few people out of the box, so I think the market is going to start to not position itself, but will move within these ranges, and I think they'll go back and forth, but we shall see. I don't think it's going to break to new highs in the dollar outright. We've already knocked a lot of people out of the box, but we may kind of seesaw a little bit within a tighter range. As I mentioned, on Thursday, we've got German CPI, and then we have also US CPI, Canadian housing prices. But as we come into, of course, Powell's going to be testifying, but that's a second day of testimony in front of the Senate. And then, but here's where the tape bombs come. At 12:15, we have Fed's Bostic speaking. 12:30, Fed's Barkin speaking. Kashkari is going to be speaking later on. That could be a little bit dollar bearish when he speaks. And then as we move into Friday, We'll have German wholesale prices as well as USPPI. Also, Fed Evans is going to be speaking also. So that's where we stand as far as economic news or Fed speak coming out. So we want to be aware of that because then you can see a market start to roll back the other direction as the markets try and balance themselves out. One thing about the FOMC minutes is also what we're starting to hear is that some of the folks were even pitching for, a 50 basis point cut. Now, I think we'll still get the cut, but, I think the 50 doesn't look like it's on the table. The market's priced itself for 25. But the FOMC minutes, you're going to have people offering that other side. So you may see the dollar come in as we go into the FOMC minutes. So just to, once again, to advise you what I think that, the market will kind of seesaw back and forth this week. We did, as I mentioned, see a good NFP. The one flying the ointment was going to be the hourly wages. They were looking for 0.3, came in at 0.2. That's a bit of a disappointment. And I think, once again, like I said, the dollar index had quite the move. I believe a lot of it was predicated on people just having to close out positions, and we pushed higher. I think the move was justified to a certain extent, but like I said, we did give a little bit of that right back in here, and that may get into us in preparation for not only FOMC minutes, but some of these potential Fed tape bombs. Looking here at the dollar index to go and start the week, as I mentioned, we were able to go on and finally close back above this broken trend line. But when you look at the dollar index over the last, couple of months or so, you've seen a lot of seesawing back and forth. And when it starts to seesaw one direction, you get a pretty decent move. And same thing on the upside, all the way to the downside, back to just like a seesaw back and forth. I think this week might be a little bit of a microcosm of that as we start to move back and forth with the risks that we have with the data that will be coming out, or FOMC minutes and Fed speakers. Each one has their own side of what they believe is going to go with. So that being said, as I said, we were able to reclaim here. So you got to give the dollar definitely the benefit of the doubt. The support, even on pullbacks, is going to come around here, this 96.75-ish. We certainly were able to go and hold above these levels. When we look at the euro dollar correspondingly, it was huge to lose this 12.62. It was, the euro had been doing very, very well despite the moves here in the Bund. And you can see here, we're looking here in the Bunds. These are obviously new all-time high prices, which is all-time lows. As I mentioned, the German data has just been leading the run as far as, very, very poor, woeful, dismal, abysmal data here, and that has really sent the Bund. That is what has really, truly pressured the euro, and that's what started the euro on the slide early last week, is this continued ascension here with the Bund prices obviously dropping lower here on Bund rates. So when you look at the euro, it was, just too much pressure at that point. That's where we started really sliding back here. It certainly looked like it was on a good breakout. Losing this 12.62 is absolutely huge. Now, we do have some support in here. Could we break lower? Potentially, but I think this week might be a little bit of back and forth, and we'll see what happens as far as, the Fed speakers. Because we've already had the big move. We've already knocked a lot of people out of the box. I don't think people turn around to rush in to say, okay, now I want to even get long dollar right now, or I want to sell the euro again. Well, probably some people think longer term or medium long term will be happy to go in and sell the euro, considering the woes we've seen out of Germany. And also one of the things that also impacted the euro after the Bunds have made new all-time lows was now the nomination for Lagarde as ECB chief, and her thoughts that she's aligned with Draghi. So once again, you're talking about more stimulus there. The only difference is with the dollar, if the Fed does embark on a rate cut, is that they have the potential to move more. But once again, breaking these technicals certainly has put the euro on the back foot, and the euro would have to close above this just to neutralize it. And actually, we'd have to really need to close above 1285 to make the market think, okay, well, maybe this was a fake out here. Let's go on and move into sterling, and certainly the woes continue here for the cable. We were looking for potentially a move down here to the 2485, and that's exactly where it went down here. Really just a technical move. That's it. Was just looking for with the weakness, the market had tried to break above this 2734, and it simply wasn't. But with the momentum, just kept dragging us slower. Really was just about just a technical target. And I believe on that 2485 is where we had our bias chart resistance, and really just a technical jab from support, which, like I've mentioned before in previous videos, I put my support through the bodies, not through the wicks, because that's where the volume is on the bodies. We'll go on and take a look here with the Aussie dollar. The Aussie dollar had been pushing up against the 70.27. Start at the beginning of the week, and we had eased back but started to make a move. But obviously with the strength of the dollar, it's paired back again. If we could have got a close above 70.27, thought that'd make us up to run us up here to 71.23. Obviously this is a big level right here, which is 69.44. So at least at least from a long standpoint, which a risk would be, or if they're moving down here trying to test, is probably going to see demand obviously start to step in around the 69.44, maybe to 69.25. Let's go and move into the dollar CAD. One of the things that we were talking about when we were on the Face webinar on Friday, I mentioned this was our bias chart support, which is 30.43. Once again, it's just a technical level. If you look across, look at all the touches coming across here. We already had a pretty big move. When we'd fallen here, our overall target was going to be for 31 even. They had overshot that last week. They came back up. You can see here they ran out of gas at this 31.36 and rotated lower. I don't see if we'll see a whole lot of movement until we get Bank of Canada decision, which is going to be on Wednesday. But obviously this market is poised to move much lower. Taking a look here at the peso, we've talked about this. This has been in a pretty well-defined range, this 19.23.6 to 19 even. A break lower here, right here at 18.92. If they lose at 18.92, then we're going back to test these lows way down here and probably take out 18.65 on the peso. We'll go on and take a look here with the dollar yen. Dollar yen had a recovery coming off this technical area here, which is 676, and we saw a bit of a bounce back here, and then the market kind of paired back. We're seeing that move again, but once again, I don't know if we'll get an extended move in the dollar here at this point. Obviously, we could see things change a lot once we get past testimony and some of these Fed speaks. Towards the end of the week is going to be important for the dollar with CPI and PPI data. That's the one thing that's going to be, if you're looking at the dollar, the whole idea, one of the things with the idea with the rate cut, despite where equities are, I mentioned that early last week when I was on Faces, I would not be selling the equities, because with the thought that there would be a rate cut, that's the last place you want to try and step in and take the other side. And certainly we've seen the equities continue to move higher. But with the dollar yen, we may try and take out these stops a little bit, possibly. But I think like I said, if you think about where equities are, you'd have to wonder as well, who would have thought that the dollar yen would still be way down here? Yes, it's a safe haven, but I'm saying is you would have expected a further bounce, and it hasn't. So which really gives you an indication that this may be the canary in the coal mine. The upside resistance is going to be this pivot level that we've had in place for quite some time, the 927, if they were to go on and make a run beyond these levels. But it's going to be rather tough for that to go on and make that move here with the dollar yen. We're going to also take a look here with the gold market. We've seen a pretty interesting move here with gold. We've been looking for a 1438, and then on the way back down, 1390. Well, we did make a rather good bounce back off of that 1390. We've kind of fallen back in place, and I think that gold will be market its time now. Gold, although we have paired back, it hasn't seen the moves, excuse me, based on the dollar, that as much as it's been with the idea of potential rate cuts. And that's what gold has truly responded to. Because if you think about where equities have been, you're thinking, why would gold be this high? Or the dollar's done so well. Well, how could gold be this? It's all about rate expectations. And that's the one trigger for the gold market here. So as I said, closing this out, the key thing here with the cash dollar is we were able to go in and jump back above here. I think obviously it's going to be important for this week how we play out towards the end of the week, not only with Fed Powell's testimony, but we have quite a bit of Fed heads, and then we have CPI and PPI. That will, once we get past this Friday, I think that's going to let us know, will the dollar ease back a little bit on these rate expectations, that we'll see a cut, and we'll probably see a more clear defined direction, because I believe this move, although the NFP was important, although it was a bit of a disappointment with the hourly earnings, but it's going to be these inflation expectations from CPI, PPI, and what the Fed's looking at. Obviously, the hourly earnings had it been 0.3 or actually 0.4, I think that had been it. That would have been the end of that story. But we're still not seeing those inflation expectations or what they're targeting for the Fed. So there's that opportunity to cut. And then once again, data has been poor. We did get a nice bounce back in the NFP, but that was after the previous one was very disappointing. So like I said, I think today or Friday was a lot about technical positioning. So once again, thank you very much. We'll have Blake next week, and thanks for joining us here on our week ahead video.